What are some tax strategies for foreigners to invest in U.S. real estate? Today we're going to talk about two important tax strategies. One is to reduce the income tax that you pay on the rental income that you earn as a foreigner investing in U.S. real estate. Number two is to actually reduce the withholding tax when you end up selling that U.S. real estate and getting a capital gain. I'm Vincenzo Villamena from Global Expat Advisors, and we advise foreigners that invest in U.S. real estate on the best way to structure that investment and obviously to comply year after year. So let's get into it. First, when you are a real estate investor and obviously you're earning rental income, you have two options as a foreigner and how you want to report those taxes. One, you could just opt for an automatic 30% withholding. That's a 30% withholding just straight on the top of the rental income. However, that's not very tax efficient. The better way is to do what's known as a net election. A net election basically entitles you to no withholding. So you do have to you have to get an I-10, you're gonna have to file a 1040-R every year, but what you do is you have the revenue and then you're able to deduct all of your expenses. Things like mortgage interest, property taxes, maintenance, repairs, everything to do with an expense on your rental property, you're allowed to deduct, as well as depreciation. And so a lot of times what we see is a net loss or a very small income in which they don't have to pay tax on it until they get to the part where they sell. Let's go there. The big part about selling as a foreigner when it comes to U.S. real estate is FIRPTA withholding. And so if you don't tax optimize, you're gonna get up to 15% withholding on the sales price. So if you're selling for $1 million, that's 15%, that's $150,000 that's gonna be automatically withheld, and then you have to go and ask for the refund from the IRS, which is a lot of money to float. So there's a few options. One, if the sales price is under $300,000, boom, you could get no FIRPTA withholding. That's zero withholding, all right? If the sales price is between $300,000 and $1 million, then you could apply for a reduction so that it's only 10% withholding of the sales price. However, really there's a third option, which is to request from the IRS, really the person that's doing the transaction, to have no withholding, all right? And there's a few ways to do it. If you're under a certain threshold of capital gain, let's say that you buy it for, $500,000, you're only selling it for $600,000, you could request that there's no withholding made on that $100,000 capital gain. And by doing that, you're able to avoid FIRPTA withholding altogether. So if you have any questions on buying U.S. real estate, selling U.S. real estate, and what the implications are as a foreigner, speak to us at Global Expat Advisors, book a consultation, and we'd be happy to help. Thank you.